Good afternoon, everyone. This is Joe Boccella here at Chaikin Analytics, and I'd like to welcome you to our presentation today of 5 steps for the new year, 5 successful steps for investing in 2018. Presenting along with myself is my colleague, John Schlitz. Bear with me for a moment. Let me just pull up my presentation here. And you can see us, see what I'm referencing. All right, great. Again, presenting along with myself is John Schlitz, Chief Market Strategist here at Chaikin Analytics, and we are going to walk through a lot of exciting material that we have thrown together. What we've put together is purely about a probabilities-based approach, and it's all about successful investing and trading. Today's presentation applies to a lot of different types of activity in the market. We'll dive into that a little bit more here. Now, I know 2017 has been a very exciting year, very, very strong, a lot of positive returns from everybody across the board, for really practically for the most part. But there's plenty more exciting heading into 2018, and there's always a need to take a strategic yet simple approach to your decision making. So with Chaikin Analytics, I'm going to show you how you can make a lot of money, but also have a little bit of fun as well. So let's go ahead and get started with the content here. So first thing, I want to share a little bit about my background, of course. Before I got started at Chaikin Analytics, I started out at a company called the Vanguard Group, which I'm sure many of you are familiar with. I know a lot of people associate Vanguard with buy and hold. Of course, that's really, the strategy that is king there. Vanguard also preached that it isn't really possible to consistently pick stocks and beat the market. And that's something that I found to be kind of mysterious. It didn't leave me very satisfied to just leave it at that and, buying and holding just be the full understanding of what I need to know about the market. While I was there, I wanted to learn more about how the market works, which led me to studying about how to analyze fundamentals, but also technicals, which I'm sure many of you, of course, are probably dedicated to one side of that or another, either fundamentals or technicals. Well, eventually I found Mark Chaikin and the work that he was doing. And I learned that he was running a company actually not too far away from Vanguard here in the Philadelphia area. So fate would have it that he was looking for someone to kind of start a coaching and education group here at the company. And long story short, really led to a great opportunity for me to take this on. And I'm going to share a lot about what we've been doing. So had the opportunity to learn from Mark on a one-on-one basis, and it's really taught me, and it's really exercised a lot of the mystery that I had about the market. So it's a lot of fun for me to now coach hundreds of investors and traders on how to confidently find the right stocks, take the mystery out of the entry points and exit points, and really as the market as a whole. So again, I want to point out that what you're going to see today, the people that I've coached have a whole variety of interests in the market. So again, I mentioned coaching not just investors, but also traders too. So that's individuals taking over control of your IRA, maybe wealth managers who are looking for a new tool to help them with their practice, but also a lot of options traders and swing traders. So I'm really looking forward to catering to, again, a lot of different types of activity levels in the market. Now I want to bring on my colleague, John. And John, why don't you go ahead and introduce yourself to the group here?
Hey, Joe, can you hear me okay?
Yes. Yeah, loud and clear.
Okay. Good afternoon, everyone. All right, just to give you a little background, prior to coming to Chaikin, well, way back actually, I worked at Lehman Brothers for 15 years on their institutional equity trading desk as the technical analyst. Then I met Mark Chaikin, and I became the market strategist for Instinet, which is an electronic institutional broker that was eventually purchased by Nomura. And there I worked with portfolio managers, all our institutional accounts, institutional traders, and a lot of hedge funds. Basically just helping them understand what was happening in the market technically, helping them incorporate technical analysis into their decision-making, show them how to monitor positions more effectively, and obviously also manage their risk. Here at Chaikin, I, among other things, I author the Morning Insights note, which covers not only what stocks and the market are doing, but how to use the Chaikin system within, but also we keep you up on whatever it is that might be impacting equity sentiment. So we might cover not every day everything, but we'll touch on whatever is important at the time, such as currencies, bonds, commodities, foreign markets, seasonal trends, and of course, earnings and interest rates. So we try to give you, we're not experts on all of that, but we try to give you a sort of a broad look at what's happening and what's affecting the market. So if you want to do a little bit further research on your own, you know where to start. And that's pretty much it. That comes out every day at 9:15.
Awesome. All right, great. Thank you very much, John. So what we are here to cover for today, thinking back on the interactions that I have a lot of our users, I kind of thought of 5 main pillars that we really kind of cater to whatever anybody's doing in the overall market. So 5 steps to successful investing. So what we're going to do, first off, is we're going to talk about the right tools. In this case, we're going to be talking about a fully objective quantitative assessment that is the result of 50 years worth of experience on Wall Street. And that, of course, is what I'm referring to as the power gauge rating, the Chaikin Analytics power gauge rating. So very critical tool. We're going to start there. Then we're going to dive into what we profile as the Chaikin classic bulls and bears. We're going to touch on everything that you need to know to really efficiently take a comprehensive assessment of a stock. Then we're going to dive into the technicals, a lot of those more finer tuned details. That's really where John is going to demonstrate his expertise. We're going to be able to begin to identify developments such as personality change and stealth institutional behavior. So there's a lot of great content there. We'll dive into, of course, timing. I know how big of a role timing plays for success, whether it's for your longer term portfolio management or your swing trades. So we're going to show you the proprietary indications that Chaikin Analytics has created in order to help you with your entries and exits. And then finally, once we know how to spot a great opportunity, we're also going to know how to avoid landmines. So avoiding situations that are just not worth the risk. That's probably one of the more fun topics to talk about. So a lot of good stuff to get into there. So knowing all of this, knowing all the content that we plan on getting into, I just want to put up a quick poll question here. And it's going to help. It's going to be a big benefit for John and I if we know what your activity interest in the market is. So if you don't mind, take a moment, let me know, how would you describe yourself when it comes to your activity in the market? So the first one here, individual investor managing your retirement portfolio. So this I'm picturing you're buying individual stocks or ETFs or mutual funds, and you're targeting a retirement date in the future, hopefully, whether it's a couple of years or a couple, who knows, maybe you still have a couple of decades before you get there. But there's that. Professional wealth managers, so maybe you're an advisor yourself, and again, you're looking for an additional tool to add to your arsenal. We have a lot of great content that we can help you there from. And again, it's what I've always found to be helpful for wealth managers is having an objective point of view to take into your decision making. So there's always a fun conversation there. Maybe you're an options trader. You're primarily here just to look for your next swing trade idea. Maybe you're somebody who likes to buy, this might be a dramatic example, but maybe you like to buy calls right before earnings. That's a very common profile that I come across for anybody interested in options trading. Or maybe you're just looking for a nice short-term move. Think of it just as a typical swing trade over a couple of days. So all of these are the I would probably describe as the main profiles of people who are interested in our program and who I work with on a daily basis, me along with my rest of my team. So, and perhaps if you do fall into another bucket, I know it's so difficult to really characterize people when it comes to the market. But if you find yourself maybe identifying in another way, maybe just go ahead and chat that into the Q&A window. I'd always be interested in hearing who's here. But thank you very much for that response. And it looks like, I'll go ahead and show the results here. And it looks like we have a lot of individuals targeting retirement and hopefully at some point in the future, obviously. So managing your retirement portfolio. So good to know. Obviously, there's a good little presence here for options trading. I'll make sure to touch in there. And again, for the good number of others as well. So feel free to chat those in. I'll try to cater to as best as I can. But thank you very much for your responses. So, All right, Chaikin Analytics, this name hopefully is familiar to you either by Chaikin Analytics, the Power Gauge Rating, maybe Chaikin Money Flow. These are some of the places that you would have seen that name from before. Paulson, Fidelity, Benzinga, Malden Economics is a big one. Somebody who's not listed here is Jim Cramer. Mark Chaikin did just recently host a presentation with Jim Cramer not long ago. So you're seeing our name build up more and more, and it's exciting for me, just given that I've been here for a few years, and it's nice to really see that momentum pick up. And part of that includes just seeing our name in a lot of familiar places. So with all of that in mind, I want to jump right into challenges. I've cited a few already. Now, again, I know 2017 has been it's been a good year for a lot of people. But with that said, there's still difficulty that people encounter. Now, I promise I'm only going to do this one more time. I don't want to bog you down, but I want to pull up another poll question real quick. This is a big one. And this is one where you can respond to as many of these as you'd like. I know you see five options here. You can choose as many here as apply, but what are the challenges that you experience in the market? And I'm sure for most people, it probably applies to at least two things here. I've kind of let the cat out of the bag to this point already, but timing, when to get in, when to get out. I know that's a big one. Stock selection. We're going to talk a lot about stock selection here when it comes to our Power Gauge Rating. This is one personally that I take a lot of pride into. I'd like to believe the services I provide here at Chaikin Analytics involve anybody who has a lack of a strategy or feel like they're lacking a strategy, maybe a day-to-day process that you're applying. That is something, again, I'd like to believe that probably my main contribution is to help people with understanding how to establish a strategy. So if that's the bucket that you feel that you fall into, I'm going to be really excited to work with you. Lack of reliable tools. Again, obviously, the support I provide is all hinged by the toolkit that I work with, being Chaikin Analytics. And then finally, information overload, I know, is another commonly cited factor. So I'll give you just a few more moments. I see a lot of you responded. Again, I can't thank you enough for that response. It just helps me as a presenter to know what's on your mind and what position you're in, so that I can really make sure I kind of communicate the benefits of our program here. So not a big surprise. I may have skewed the results here, but honestly, probably not. Timing is the big one here. When to get in, when to get out, whether it's again, a lot of you mentioned that you're interested in portfolio management for retirement. So what stocks to get into, how long to stay in them, when to determine that it's time to exit. You're going to see a lot of content about that today. Again, it's a really, really fun one to talk about. Stock selection, no surprise, is the second biggest one. We're going to talk those classic bulls and bears. You're going to really enjoy what we have for you there. Throughout the rest of the presentation, lack of a strategy, reliable tools. You're going to see that, of course, information overload. I think a lot of that content you'll see in some of the different examples. So good. We have a lot of good stuff to get into today then. All right. So two that I really want to emphasize again is that information overload. Again, if you're in that position where you're kind of preparing for retirement at some point in the future, there's a lot to think about. And odds are maybe you're not, obviously maybe you're probably working full time at this point. So you have a lot of information that's occupying your time. And given that one of the greatest challenges of being in the market is information overload, the market can be a very, very overwhelming factor. Luckily, though, a little bit of a spoiler alert. Again, we have a pretty good solution for information overload and helping you just kind of make practical sense of really what's taking place in the market, what's going on in an individual stock, especially a lot of those story stocks like Tesla comes to mind. Tesla's a one that gets thrown around a lot, and people kind of look at the product, their stocks, and kind of make a conclusion about what the stock itself is likely to do just based on news that comes out about the whatever new developments they're coming out with. But again, we'll put all of that into context and help you make sense for what's going on in a stock like a story stock like Tesla. The other one, of course, though, is timing. For those of you who are, especially those of you who are swing trading, especially that timing really is everything. So I'm very glad to show you that we have a solution for that challenge. So what Chaikin Analytics looks like is this workstation here consists of everything that you need in order to cut through the clutter of the market for individual stocks, and in order to keep your attention on what's most important for you to generate returns. So helping you zero in on individual stocks, helping everything make sense, and again, just kind of clear out a lot of that clutter, as we like to put it. So what's unique about what we have is that we provide a directional edge. We're able to help investors and traders because we give you that directional advantage. Our platform looks at both fundamentals and technicals, which is pretty unique. We combine these into a quantitative model. There's no expert behind the scenes that's picking stocks or anything like that. Rather, we focus on the factors that drive the direction of a stock. That's the thing that really sold me the most on this power gauge rating, is that not only have we identified those factors, but they're only focusing on the ones that drive the direction of the stock. So we use the sum result of all of those factors to point us in the right direction. Of course, by having the directional edge, you'll be able to determine which stocks are about to break out and which ones are likely to continue in their trends. So what this approach looks like, I would describe as being a disciplined methodology. Just like most things in life, you have to have a strategy. This applies to so many things, outside of investing, but of course, investing is absolutely included in this. Having a reliable strategy is not just limited to investing or trading, but it's certainly necessary for trading, especially for those of you, again, I know there's a little portion of people here who are here for swing trading. Got to have a disciplined methodology. You may not have winning positions if you don't follow a strategy, but I'd be willing to bet that most of your trades won't work out if you're not being consistent. So you might get a couple of winners here and there, and I'm sure many of you already have. However, if you want consistent returns, consistent performance, it requires a disciplined approach. So our strategy all begins, you can see at the top of the page here, of course, it begins with the power gauge rating. Then I like to take direction from the market. That's a big one. If the market is shifting more bullishly, obviously that's time to focus on the stocks with the best bullish momentum, stocks with a bullish power gauge rating. If it's looking a little more, bearish perhaps, which it's been a long time since we've had that. You really got to go for a stretch if you're going to describe as anything we've experienced lately as being bearish. Well, simply enough, if that's the case, then I'm going to start to focus on a little more of a defensive approach, as we saw earlier. And of course, we're going to zero in on some, perhaps as it applies, any shorting opportunities. So from this point, then I'm going to fine-tune my analysis, all part of my routine. Fine-tune my analysis by using factors such as Chaikin money flow and relative strength, along with our helpful buy and sell signals. So a lot of good content coming here first. So, all right, step one, the Chaikin power gauge rating. Take a blended approach by using this power gauge rating. You can see those 4 categories listed here. Now, I want to start with a really fun example here. I intentionally blocked off the name of this stock. You're seeing a really good looking chart right now. And I kind of want to do a little bit of a teaser here. I want you to guess what stock this might be. You can chat it into the Q&A window, or you can just kind of jot it down maybe if you're taking notes. But I want you to take a guess as to what stock we're seeing here. We're going to come back to this later on, but something I do want to note here is just how much green you're seeing on the page, and there's a good reason for that. So this is my bull mystery example, and I also want to show you a bearish example. Again, I'd like to cater to anybody who's, to a good number of investment strategies that are being applied. So 2 mystery stocks here. Feel free to take a guess as to which 2 they are, the bull and the bear. But what I want to point out about both of these is the power gauge rating. Very, very consistent. Great example of repeating patterns. This is why I really, really like these. So again, I intentionally blocked out the name and the ticker symbol. I want you to go ahead and take a guess based on the price trends and their charts. And I want you to see the continuous downward spiral, in this case here for this bearish example, that the stock has been on. And just given how red all the indications are, you can see if you just quickly blink at this chart here, you're seeing overwhelming amount of red here. So you can see that very easily. I want you to see how this is predictable. So we'll come back to this one later on, do a quick little reveal. But I want to just show you some very effective examples because it's really opened up the door for a number of different partners that we've joined up with over the years. So over the years, we've been fortunate enough to have a number of different partnerships. One of the most notable ones has been with John Carter. Again, I'm sure some of you, probably a good number of you, are familiar with his simpler trading service. We received a testimonial from him a couple of months ago. What I love about it, the reason why I want to show you this now, is that it points out the value of having a blend of factors. And again, a combination of 20 fundamental and technical factors. Very, very unique. And if you can't tell yet, the power gauge rating is truly an awesome meter for stocks. All objective, awesome meter for stocks, as John puts it here. So hopefully you saw that in those past 2 examples. But we're very, very glad to be working with John Carter and his group. So again, I always like to plug that in here as we're talking about the power gauge rating. So just to zoom in a little bit more. So here is the power gauge rating itself and the 20 factors. Fundamentals being financials and earnings. The technicals, we're looking at technicals and expert opinions. The greatest thing that this has done for me, along with thousands of others, that it has taken the mystery out of stocks. Because my problem before Chaikin Analytics is that I would associate a company very closely with the products or services that it produces. And while in some cases I'm thinking of a stock like Apple, where obviously thinking about iPhones, and I would typically associate it with that performance with their stock, that's actually a pretty close example between those two. But that is not the case for most stocks out there. So what I really like about this the most, and again, think back to information overload. Think about how many factors you look at each day for just one single stock. The fact that we've identified these 20 factors as the most important ones, and really I should be pointing to Mark Chaikin here right now, is a huge win just in and of itself. So when you also consider that each of these factors are being rated and compared against one another to produce a single overall rating, you realize that there's just nothing else like this out there in the market. So these are the 20 factors here. I always like to kind of lay them out. And just think about this visual too. This is a good one. I always like to leave this in the presentation. If only for the reason that that this is a reminder that there are no more tables to dig through. Again, a lot of those for individuals out there managing your own portfolio, no more calculations that you need to generate. The work has already been done from you. For those of you who are, again, a little bit more on the professional side, you're a wealth manager, you're looking for a fresh perspective to take. We wouldn't expect you to completely overhaul your entire approach, but if you're looking for a third-party perspective, just take a look at and take a second to think about how much time would be put back in your day if you don't have to dig through all those different types of tables. So I hear the phrase very often that stock market veterans say, and I love repeating it here. So often I hear, gosh, I wish I had this 20 years ago. And this is a very, very common experience that I hear. So always like to put that out there. All right, so you've seen so much about the power gauge rating, and I'm sure a lot of you are wondering and asking yourselves the question, does it work? And as you can see in this chart here, the answer is yes. Yes, it does. So these are the back-tested results. Right now, we're looking at 2016. We're going to look at a few more in a moment. 2016 was a great year for the market. Geez, even better. Pardon me, excuse me. 2017 was even better than 2016, but obviously 2017 has been great as well, especially during the time following the election results. What you see here, though, is that stocks with a bullish or very bullish rating, you can see both on the right-hand side, consistently outperform your average stock in the Russell 3000. Take a look also at the bears and the neutrals, right? Imagine what your results would be throughout 2017 if you could cut those weaker stocks out of your contention. So I'm sure a lot of you, in fact, I'm going to tell you about an email that I got just today later on, but I know a lot of you are probably looking at your overall returns for 2017 right now. And think right now, if you could cut stocks out that had a bearish or a weaker neutral rating out of your contention, what do you think your portfolio's performance would look like right now, given that we're just a couple of weeks away from the new year? This is the first reason why you want to follow a strategy and put the probabilities on your side. This visual right here says it all. If you're buying and holding, you're looking for growth, where would you want most stocks to be or associated with? Why take a risk on some of those weaker ones? That's the point here. I want to recycle a phrase that Mark likes to use for a lot of swing traders, bull or bear, we don't care. This is especially true of 2015, which was a much more difficult year. This goes back to allowing the market to point you in the right direction. So if you had Chaikin Analytics in 2015, you'd be shorting much, much more than anything else. Again, this applies to our swing traders here. Now, this chart also makes the point that you don't need the same number of bullish trades as you do bears. I think 2017 would speak more to allocating more on bearish types of swing trades. Again, if you're interested in swing trades, than bearish ones. And this is in fact, I have to say, since the end of summer, this has been a very common message that I've been putting out there for a lot of our swing traders. But anyways, by following a strategy where you take direction from the market, you'll know the best way to allocate your types of trades. So, sorry about that. So that's my message for swing traders out there. Overall, though, cumulative performance. Here's the power gauge rating done throughout this entire bull market, really dating back since 2011. As you would expect, bulls and variables have consistently outperformed while bears have underperformed. I always like using this phrase, allow Chaikin Analytics to be your GPS for stock selection. So that is the main point. That's the goal that we want to serve here. Partnerships, I mentioned a few before. Two big names, two of the most well-respected institutions in the country use Chaikin Analytics as their GPS for stocks. The first of these two was NASDAQ. We started with them where we partnered for 3 alpha indices, a large cap, a small cap, and a dividends one. We took these indices and we really just overlaid our power gauge rating on top of them. What we did was really we parsed out a lot of those bears and neutrals. We just want to focus on the bullish and very bullish ones. No surprise, all 3 outperformed their NASDAQ benchmarks. This opened up the door where we started a partnership with New York Life, their mainstay investments group. And this led to the launch of our first ETFs. Now, I have to say, I'm not here to talk about the ETFs. Rather, for today's presentation, I just wanted to use it as an endorsement for the effectiveness of our power gauge rating. So the two of these, two of the country's biggest heavy hitters rely on our power gauge rating. That's really the point I wanted to get across here. Along with, of course, the thousands of our subscribers who use Chaikin Analytics every day. So something very, very proud of that we have here that I always like to share. Coming from the trenches, from, again, an individual who's managing his own portfolio, one of the best comments that we've gotten back is what Chaikin Analytics provides. One of the best side effects of Chaikin Analytics is what Jim mentioned here, a better night's sleep. This really kind of ties back to information overload. If you can kind of put that to rest, where you can make sense of what you're seeing for the market, for individual slides, and what it really results in, of course, you have a great return, as Jim mentions here, but also really gives you just an overall better night's sleep. So really, really critical to recognize the benefits aside from just the monetary value. So that's the power gauge rating. And step 2, knowing that we're going to be placing a lot of emphasis on the power gauge rating, is to really recognize the lessons from our classic bulls and bears. We're going to look at bears in a moment. First one, bulls, what to buy. No better place to begin than with the Chaikin Analytics Classic Bulls. These are the stocks that from head to toe, we feel extraordinarily confident about and are showing little to no signs of slowing down. So we characterize these primarily by the power gauge rating. You can see that here, relative performance versus the overall market, along with that institutional behavior from Chaikin Money Flow. So the example I want to show you here as a classic bull is ACN, Accenture. What I like about Accenture here, what I love about it is focus your attention down here toward the bottom of the page. Now, ACN is under the software services subsector. I found that in Chaikin Analytics. We're going to see more of that in a moment, but which is done, the sector as a whole has done so well this year. What I want you to notice about ACN, though, is that the stock has been pretty volatile at times, especially since about this June timeframe here. But when you look at the power gauge rating, you'll really see the accomplishment. This stock was on our radar because we could see the rating go bullish for a short time in February, but you also saw money flow go strong. So it was a good stock to keep on your radar. The trick, though, is when the power gauge rating went bullish and stayed bullish, you can see exactly what happened with its performance. So this is exactly what we mean by a directional edge. From the bearish standpoint, from the opposite side of things, you're flipping that criteria right on its head. So here's the Chaikin Classic Bears. You're looking at each of these same indicators. Again, power gauge rating, weak performance versus the market, weak Chaikin money flow. But note what your interest in the market is. Again, so clearly, if you're buying and holding, if you're getting ready for retirement, these are the stocks to avoid. If you're managing, if you're not managing longer positions, maybe if you're just interested in shorting or even options trading, again, think just the simplicity of buying puts, betting, taking a directional. This is what makes for great candidates to consider. So simplest example, perhaps a little seasonally appropriate here, is Mattel. So I want to show you Mattel because as just a familiar bear. This is a really easy one to kind of let it sink in. Again, look at the bottom of the page. You can see the power gauge rating overwhelmingly bearish throughout the course of the year. For those of you who are looking for helps with your longer term exits, this shows that you really can't rely on hope for your stocks to turn around. If you're somebody who struggles with timing, and obviously I know most of you mentioned that you are, if you're having trouble with timing, it's an important lesson to recognize that you can't just hope that a given stock will turn around. When the picture becomes grim, the power gauge rating will help you easily determine when it's time to get out and take your profits. And obviously in this case, if you're sticking with Mattel from 30 down to 28 to 26 to 24, what I love about this is that the picture never got better. There was no reason that came up for you to stick around with the stock. So important lesson here obviously you want to keep this to a minimum, but you definitely want to minimize your losses as best you can. So now I want to show Mattel is very, very easy for us to look at as an example because the stocks have been in downturn and have been bearish all year long. So I wanted to throw in an example. And again, I want you to look down here at the transition that occurred. I want to show you this example of Charter Communications, which I would say has just recently graduated into classic bear territory. I don't know if graduated is the right word, but recently transitioned into classic bear territory. Your attention should be around the August timeframe. All right, so looking around this, I guess, August-September timeframe, the rating goes bearish. The stock has been in downhill the entire time since then. There's really no ambiguity. And we haven't even gotten to the technicals here, but clearly the picture sours, and it's really led by the power gauge rating here. So the power gauge rating for Charter, the role here as it currently stands to determine what you can really expect going forward. So for me, the picture is much more of the same kind of downward performance. That's the main thing that I'm seeing here. And look, if it hurts to go from 380 or 360, well, it's not going to get any better down here at 340, at 320, and we have every reason to believe, again, 300 to 280. So you can see the point here that you really don't want to hope that Charter is going to turn around. Something I really liked here, I always love getting emails and images from sent to us from a lot of our users. This was really cool. I like to show Mark's response here because speaking of a disciplined approach, you can see that Mark takes his time to really write down each of the positions that he's managing. I think this is especially great for any of you swing traders out there because it gets very detailed and it's easy to kind of get a little overwhelmed, obviously. So what I love about this, Mark mentioned had a 90% average return in the first 6 weeks for earnings trades using options play. We haven't even gotten into options play quite yet. And our earnings functionality, all very simple trades, makes the process fast and efficient. So instead of getting bogged down in due diligence, I was trading instead, which is great. So again, just a little testimonial for really taking a disciplined approach with your approach in the market. One more, I love telling this story. We're looking at a stock right now, Sun Edison. Those of you who may have recently gotten into market, you're probably not familiar with it because you don't see it trading anymore. The reason that this is one of my favorite stories, and I know it's over a year old, but it really makes the point. This is where our power gauge rating rode Sun Edison all the way down to bankruptcy. Again, not a common situation. I'm not saying that if you see a bearish rating, it's guaranteed to go to bankruptcy or anything like that. Rather, I think it just nails the point that our power gauge rating, when the situation gets bad, simply enough, you're not relying on hopes and dreams. It's a stock that Mark had been using for a lot of his presentations leading up to the event when they reported bankruptcy or declared bankruptcy. We happen to have CNBC on in the office here, and it was great because we were all familiar with the stock and we pointed to it as soon as they had actually filed for Chapter 11. That was the headline we came across. So we had to take that picture, just kind of plop it right in the presentation, and it just makes a lot of sense. I think it's great. Sadly, we did run into people who mentioned that they were in Sun Edison. I bought Sun Edison at $15, which my firm was still recommending. If I had been using Chaikin, I would have saved a lot of money and a lot of pain. So we know there's a lot of people out there who aren't using Chaikin Analytics and yet still, again, kind of relying on certain perspectives. let us be a third-party perspective for those of you who may perhaps be in similar shoes as Edward here. Hopefully, obviously not with Sun Edison, but perhaps other stocks. Oh, no, sorry about that. Typically, I don't encounter that issue with my mouse, but sorry for skipping ahead. Anyways, let's go ahead and skip right along. I want to bring John back onto the webinar here. We're going to talk about the ease of our technicals, starting with our dynamic duo. This, of course, is how we find big winners and losers. You can see that breakdown going on in some of those classic bull and bear examples. So, John, let's go ahead and take it into NAV.
Okay, thanks, Joe. Okay, let's get into the weeds a little bit. I'm going to talk about technical aspects right now, but I want you to keep in mind that if you're not a technician, if you don't look at charts all that much, if you're not familiar with all the basic indicators, that's okay. I'm going to try to keep this as generic as possible because that's really the best way. There's about, in a 400-page technical analysis book, there's probably about 70 pages that are meaningful and important and helpful, and the rest you can almost forget. Navistar, as you can see, was in a sideways range, basing for about 8 months. Okay, so you take a look at our readings and money flows flopping around, relative strength's a little weak, and the power gauge is neutral. So, all right, in the way we look at it, if you're looking for a long or even a short for that matter, you move on. Okay, you want the odds to be in your favor, and this is just, it's wishy-washy, and it doesn't make any sense to really try to anticipate something that isn't leaning one way or the other. However, in July, August, price moved up to the top end of the range and stayed there. That's a good sign from a pure charting perspective, but it really doesn't tell you all that much about what's happening under the surface. But now, if you look below that, the Chaikin money flow, which is calculated by simply looking at the range the stock has and where it closes relative to that range, okay, and then there's a volume multiplier on top of it. Money flow measures really for us what the institutions are doing. And sometimes money flow is very strong and price is ripping higher, but many times money flow is relatively strong and price is just going sideways. And we call that, in this particular case, stealth accumulation. In a case like this, the institutions go in, the stock is fairly close to breaking out, and they start to feel good enough about it that they want to start accumulating the stock, but they don't want to push it above resistance because then all the breakout buyers will jump on and the short coverers will get involved, and then they won't be able to buy the amount of stock they want to at those lower prices. So they gingerly go in and they sit on the bid side. Sometimes they go in the middle. Occasionally they'll take stock on the offering side, but they won't be aggressive. And the second the offering side starts to thin out, they'll back away. So over a course of 4 to 5 weeks, you can see what happened. Money flow went from flipping around to definitively positive, but the stock didn't break out yet. All that tells us is we're starting to raise the odds that the resolution to this 8-month sideways pattern will most likely be positive. But now we have more to check. Relative strength, which was negative from March until July, flipped positive. That's very important to us because, you know, negative relative performance is anathema to these portfolio managers. You know, they get paid a lot of money if their stock goes down less than the market. So it's not really in absolute terms, it's about how they do relative to their benchmark. So when they see a stock start to outperform and it's still neutral in its actual price range, then they really take notice of that. And of course, the power gauge, the most important backdrop factor for us, it's not a short-term trading factor, but in terms of being a positive backdrop, that turned bullish in July. So here's what we have. We have a sideways trading range of 8 months. We have a narrower sideways trading range right below the breakout level. And if you were only looking at this chart without any of the other indicators, you'd say, yeah, you know, it looks like it might break out. But you really, that's as far as you can go. This, however, with positive money flow, positive relative strength, and a positive power gauge, is strongly suggesting to us that the stock will break out to the upside. And it's doubly interesting. We'll get into this a little bit later in the earnings section, but it's doubly interesting that all of this is happening right before an earnings report. You can go to the next one, Joe. It's just pretty much the same deal with FCAU. 8 months basing action, and then money flow starts to improve dramatically, but they're still being, quietly aggressive, not very aggressive. Relative strength in the power gauge, by the time we're in the upper end of that trading range, are already improving dramatically. Power gauge is positive. Relative strength has become, it's still positive, but now it's more positive than it's been in like the prior 3 or 4 months. These are just all little clues that give us a leading edge. It doesn't mean we necessarily advise running ahead of the breakout, but we would strongly advise not shorting up there, because some people and many people are looking at that and saying, well, looks like it's gotten up to about 12 3 times and can't get through. Maybe we have a short-term triple top there. So it doesn't matter whether you know to call it a triple top or a sideways consolidation or a rectangle or an upward sloping channel. It doesn't matter. You don't need to know any of that. You just need to have a pair of eyes that can see sideways. Is sideways good or bad? Well, I don't have any way to tell. Well, in this case, you do. Very positive money flow, not just positive, but at a new high relative to the prior 6 months. And then relative strength and the power gauge were positive. So it improves your odds if you want to place your bet prior, but you don't have to. And also, the way we use these indicators is, let's say you're a little more conservative, you want to wait for the breakout. We also use them to confirm the breakout, because many times, and maybe you've experienced this, you buy a breakout and then it whipsaws you and it goes right back down below the breakout level. That can happen, but in this particular case, when we see the underlying credentials this positive, there's probably only about a 20% chance that would be a false breakout. The next chart is an example of how it works the other way. Obviously, the stock was in a moderate uptrend, makes a new high after reporting positive earnings. That green EPS says that earnings beat the estimate. So the stock pops up to a new high, a new 52-week high. Everybody gets excited. Good earnings, new highs. Okay. What does that mean? Well, to us, if you threw it up on the screen before you took any action, you'd say, looks like institutions are actually selling into this. That's surprising, especially with beating earnings, but it obviously does happen. So at a minimum, this told you not to chase it. Let it settle back and see what happens, because sometimes you get a sell on the news after an earnings pop, and it's legitimate and it's still a good stock. But Ulta fell below the breakout, the rising uptrend line, okay, and then it stabilized near the April support. So once again, people without the other credentials are looking at it and saying, okay, we made the new high, we pulled back the support, we're holding support, maybe I'll buy it for a trade up to the upper band. In this particular case, not only did money flow stay negative, but during that minor stabilization, the relative strength line went negative. And that's very bearish, because that's telling us that even though the stock is going sideways, the market must have been going up. Okay, so that's a double whammy. So you have a trend line break, you have negative money flow, relative strength is now turning negative, and the power gauge also flipped negative. So these are the ways in which we use the system to get a much better feel for what's happening internally, what's happening under the surface, how are the institutions really looking at it, how are they approaching earnings. It's I think you might be able to see by now that if you just were looking at the chart above and you covered all those indicators with your hands on the screen, you'd realize, wow, that looks pretty good. And I'd have no way of knowing what's happening underneath the surface.
All right. Awesome. Thank you. So I have to say, so I mentioned before I joined Chaikin Analytics, I was just getting into technicals. And what you just saw from John has definitely been a mentor of mine, right up there with Mark as well, for the technicals. And probably the thing that really drilled home the point for me, and I think would for you too, is following these Wyckoff patterns. This is really the backbone for what we think of when it comes to analyzing the technicals in our program. In this chart, what I want to emphasize the repeating pattern of higher highs and higher lows for bullish stocks. And this is really the classic framework for a classically bullish stock. Additionally, though, for those of you who are, again, swing trading, we don't need to form the pattern. We don't need patterns to form over the course of several months. All you need to do is look for stocks with signs that indicate whether the next cycle of a higher high is likely to develop. So find the stock and then wait for the right time to open and, of course, close. If this is our expectation for a stock, then you really know when to enter and to exit. So these charts really illuminated my perspective when I see content like what John just mentioned. So I want to go back. I think a great stock that illustrates this technical pattern is the bullish mystery stock from earlier. This is Cigna. So Cigna really has been the best example of a stock that I could really find throughout this year, replicating those Wyckoff patterns that we just saw. And it really follows it almost perfectly. Now, while John was presenting, I took a moment to look through some of the comments. And I saw that there was a question regarding the indications. Do they tell us entry points? That is, of course, the idea here. You don't have to wait on one of these buy signals to come into play. Right now, you're looking at oversold buys. And what I really want you to see here, though, is that kind of pattern of, I like to describe it as kind of 3 steps forward and 1 step back, because it makes for a great illustration of the Wyckoff pattern. The signals here kind of help give you another perspective on the shorter term timing. I should also say regarding Cigna itself, it follows the pattern very, very close. And what makes it even better is that this was originally shown as a personality change for the webinars I was hosting several months ago. If you'll notice, and I know right now it's just about graduated past the point, you can't see the time frame for when the power gauge rating was neutral anymore. It's obviously bullish for entire 12 months. You can see the relative strength is lagging behind just a little bit. Now, not to really micromanage here, but going from neutral to positive, that change with the power gauge rating being bullish was great. It really exemplified a personality change. And to tie this back now, it's great to see that the stock is now what I would consider to be a classic bull. And the entry points have been abound. So oversold buy signals really throughout several points this year. Again, you don't have to wait for a signal, but it's there to kind of point out that there's a technical trend developing. So it's an awesome example. I also like to emphasize really what an exit point does not look like. Right now, you could look at a stock like Cigna and say, well, hey, it might be a little toppy. It's here at 210. The point that I want to make about that is, well, if it's trading, if it was up around 210, now it's about 205 or close to where it closed today. There was a point where you could have made that same argument at 190 or around 180 roughly, or perhaps 170. When you look at these points, maybe whether it's Cigna or another stock that's in a good position, if you start to get a little antsy, maybe you're thinking, you're just becoming skeptical about how long a given stock can continue its pattern. This is where the power gauge rating plays its role, telling you, look, there's more growth likely to occur going forward. So I love this example here. I use this in just about all of my webinars because it's a great representation of the guidance that we're providing. So something that I'm borrowing from Mark here is a quote from Warren Buffett talking about the ideal setup. This really emphasizes our probabilities-based approach. They don't call balls and strikes on Wall Street, so that you don't get penalized for losing trades. You don't have to swing at everything. You can wait for your pitch. So emphasizing patience here. I love that. So it's a slide I always like to use because it really is. It just emphasizes how you can be successful and really limit your losses. Now, sticking with a little bit more of an aggressive approach here, one of our secrets is to apply a top top-down approach to the market, which I'm sure many of you are already familiar with. What you're seeing is a display of our sectors in Chaikin Analytics. And we provide a great little breakdown here using ETFs. I'm sure many of you, again, probably have some degree of interest in ETFs. Well, what I like to do with them is I like to rely on our power bar here for those and identify which sectors of the market have the best growth potential, which ones are likely to outperform the market. And then also for individual stocks, drill down to those individual stocks. So not only can you see the sector, but you can see which ones have a bullish rating. So looking at the XLF itself, this is a group, look, it's obvious that financials have done really well, especially since all the momentum from tax reform has really picked up. But this is a group that we've been bullish on for most of the year. It was a great example back here in around March and April where there was a pretty sharp downturn. I believe this is right around the first time that there was an attempt to push the healthcare reform through Congress, but it kind of hit its first major snag. And so there was a little bit of a drop in, I guess, investor confidence in financials, whatever have you. But it's a group that maintained a bullish outlook, and you can see it recovered very, very well. You don't want to give up on financials. That's the point I'm making here. And yet since then, you're gone on to new highs. It's been a really, really good couple of months lately in financials, not just in the overall sector, but also in plenty of individual stocks. There's too many for me to really point out, but I wanted to drill down into Citigroup, because this is a stock that's really been thrown around a lot this year. So overall, wonderful technical trend. Power gauge rating overwhelmingly bullish. It's okay if it goes neutral for a little while. I work with situations like that in a lot of my support webinars that I do for our subscribers. But Citigroup is a great example of a strong stock and a strong industry group staying bullish throughout the course of the year, kind of hanging tough when it gets difficult, because you have reason to believe that the stock can continue to power through and go on to new highs, which is just what the stock has done. So great representation of a strong stock, strong industry group. It's gone through plenty of turmoil this year, but here we are yet again finding all-time highs in the group as well as in the individual stock. So another technical approach, I know step 3 is probably the longest step that we have prepared here, but sticking with the technicals, we want to jump into the institutional approach, institutional outlook, monitoring for stealth behavior, whether it's buying or selling with our Chaikin money flow indication. So John, we're going to start with a triple D here.
Okay, and I just want to touch on one thing before I continue, is that whenever I or we look at an individual chart, we are always, either prior or before, also incorporating into these odds we're trying to calculate on a breakout or a breakdown. We incorporate whether the stock is is it a strong group? You know, is it a strong stock within a strong group, within a strong industry, or is the group or industry strength working against us? That's always very important to take into account. Just keep that in mind. We're not overlooking it. We just can't cover every minor, every aspect of the strategy in this particular webinar. But triple D, here's an example of using the Chaikin system with a very basic technical pattern called the double top. Stock goes up, breaks above its prior resistance from February, has a nice aggressive run, pulls back, money flows nice and positive. So you think, oh, well, maybe I'll buy the pullback. So the stock pulls back, and money flow tails off, not too bad. Power gauge though went back to or improved to neutral, but still. Again, if we're looking for high probability plays, we're really not looking to buy a stock that could be topping out. We don't know yet. But if we're looking for what we think might be a healthy consolidation after the move up, then we expect to see money flow stay positive, and we want a positive power gauge. Because since the power gauge is neutral, it's telling us that certain measures, certain quantitative and fundamental measures just aren't where they should be to give us the type of odds we want to have, okay? But in any event, what I'm trying to do now is for the people who are a little bit more technically oriented, try to show you how you can use the system to help you with pattern analysis or trend breaks or whatever you're looking at. So we have a double top potential here. It comes back down to the red dashed line, and then we see if it holds. Well, the interesting part before that is that notice how we had very strong money flow on the first peak, stock pulled back, and then we had dead neutral money flow on the second peak. That's a red flag to us. We have a neutral power gauge, and relative strength is still a little positive, so we're not going to aggressively short the stock there, but we're not going to chase it higher either, for sure. The stock breaks below that support level and then seems to be basing. Okay, so is it basing? Is it good or bad? Well, you know where I'm going with this because we've done this already. That sideways hope springs eternal pattern had leaking money flow negative, relative strength had turned negative, and the power gauge had also turned negative. And again, isn't it interesting that it was happening right before an earnings report? So it's telling me that the institutions, the negative money flow is telling me that the institutions are very concerned about that earnings report, and the negative power gauge is telling me that 5 or 6 or however many of those 20 fundamental factors are deteriorating, but price is not yet reflecting it. Let's go to the next one, Joe. We'll try to move a little quicker here because I don't want to duplicate the same themes. But again, sideways pattern, doesn't look too bad. Looks like it's basing at the bottom of the range. Good or bad? How do you know? Money flow obviously says not good at all. And relative strength turned negative while prior to the breakdown. So there was a red flag. Power gauge turned negative. So just imagine this is a stock that maybe you rode up from 140 all the way to 250, and now it's going sideways. And theoretically, according to the Wyckoff method, right, you go up, you pause, you take a healthy pause, and then you go up again. That's where the technical analysts, especially on CNBC, they make the assumption that if it's in a long-term uptrend and goes sideways, they're making the assumption until proven otherwise that it's going to start another leg up. Well, that's a little overly simplistic. Okay, you can't do that. And obviously, if you look at the top right corner, you can see that the drug group was actually, the industry was weak as well. So that's another negative. So, when it's basing at 220 or trying to base, if you're using our system, it will suggest stay away from it. See if something changes, see if it continues to hold. If it breaks down, we'll take another look when it's oversold. Well, it got oversold and that it put on a little, what we call a triangle or pennant formation. You don't have to remember what it's called. You just have to know it broke support, it's trying to hang in there now. How do we evaluate that trying to hang in there exercise? And obviously, we give it an F, negative money flow, negative relative strength, and a negative power gauge. Fortune Brands, it's a good example of how institutions also, as I mentioned before, quietly accumulate a stock in a company that they think is going higher. In February, we got towards the tail end. We didn't know it at that point, it was the tail end, but we got towards the latter stages of a sideways pattern. Again, price started to get hung up in the top half of the range. That's usually a good sign. But unless we can confirm it with positive money flow, we're not sure. You might say, well, relative strength's negative. Why would you do that? Well, we wouldn't run ahead of that breakout, but it's not surprising to have a neutral basing formation have negative relative strength. That's not that unusual. But the most important thing is that the positive money flow was showing you that the institutions were starting to quietly accumulate that stock. And then it's, the indicators continue to be very useful after the fact because you not only want to anticipate a potential breakout, but you want to confirm it as being valid and of quality or not. In this particular case, the stock broke out, checked up at about 62 for about 3 weeks, but money flow stayed positive, and then the relative strength swung positive and the power gauge turned green and stayed green. So that gives you the confidence that if you bought the breakout, you can try to squeeze a little more out of it between that 60-62 rest period. You can have the confidence that it's still telling you the odds are maybe one more push higher. And then it gets up to 66, gets overbought, you get outside the band and you go, okay, nothing really tells me to aggressively sell the stock up there, but I'm going to take some profits up there. And just briefly, CMG, everybody knows the story behind it, but the stock went up. You can see how when it was making highs up at 480 and change, money flow was very anemic. Okay, can't short a stock on that. Comes down to the prior support level, it holds, looks like it's basing. You need to evaluate it. Obviously, the money flow, all three indicators, we've got a triple negative play here, basically said no. That's actually, we're not going to get into it in this presentation, but that's one of the screens we look for potential shorts. It's very effective.
Awesome. Thank you, John. So we've seen a number of examples so far. A pretty obvious fourth step here, as I mentioned already, is to follow the guidance from our buy and sell signals. The reason that these are great is that each of these are associated with the technicals that we've just seen. So oversold, relative strength, money flow, and they'll play in very, very well for a few examples. To unmask our other mystery stock, bearish one, I saw a lot of you chatted in and got this right. Under Armour. Looking at the examples here, I see four, again, pretty effective signals. One, obviously, if a week or two before earnings leading up into that play. Again, each of these are relative strengths. Another pretty simple move down here, and again, over and over and over again. These patterns tend to repeat. So typically we'll look for a success rate of roughly 7 out of 10 signals to be effective. But again, think about a stock though like Under Armour, and it's again another one of those great story stocks. An apparel stock we're all familiar with. I really like their clothes and their products, what they really put out there. A lot of people like the athletes they sponsor. Think about Jordan Spieth, if any of you are golf fans. But as Mark likes to say about stocks like this, buy the clothes, sell the stock. Look at the sell signals when they come into play. So all about drilling down for those different technical patterns. And we like to do our best to make you aware of those signals as they appear. What you're looking at right now is the dashboard view for signals. So anytime a stock generates a signal over the past few days, we're going to put these right here on this dashboard. Very simple to be able to see what activity is generating. So always trying to put a lot of information in front of you, but obviously make it without it being overwhelming experience. So we've seen a lot of examples of those signals. That would definitely be what I would say is the fourth kind of step to get into. And then finally, I know it's as quickly as we've gone through step 4, playing good defense. So I love this here. Stocks you don't own that matter. I've mentioned that quote a couple of times throughout. Reduce your risk by avoiding mistakes. This is a big one. How do you determine whether it's good time to take a risk on a stock or perhaps when it's time to exit? There was a question that came in right as I finished up my last section regarding Cigna. So would I stick with Cigna? Would I buy it, sell it, or hold it at this time? That's a stock I would definitely hold. Much, much closer to, in fact, a classic bull example. A stock that is looking different, though, if you're looking for a defensive example, think about a stock like CTSH here, Cognizant. Right now, what's different about this stock now than Cigna, like we were just looking at? Cognizant, noticing each of those factors, John just pointed out on his slides, I know in this case it's not like a triple breakdown, but take a look at what we just learned from John, money flow and relative strength in both of these cases, and the power gauge rating. Notice how you have this transition occurring here. This is much, much closer to what I would describe as being an exit. This is a stock that you probably don't want to hold for very long. And it's all based on the transition here. No longer bullish. Relative strength is stocks clearly lagging behind the market. Money flow is definitely going south. And so really you're looking at a trend here being broken down below that long-term average. So each of these lining up, if you can learn from the technicals, which again, I know we're covering a lot of stuff on this content, but we have a ton of support that we provide I'm going to tell you about in a moment. When you notice these breakdowns, this is what a reliable, strategic, probabilities-based decision would look like. So Cognizant, a great example for what it's like to play defense. Now, because we're sooner, before you know it, we're going to be at earnings season. So when we talk about defense, I wanted to talk about earnings because we really have been going through a very pivotal, let me rephrase this. This market has been very pivotal based on earnings. So it's critical to pay close attention to how stocks are reporting and what that means for the overall trend of the market. Now, I think this is a topic that applies to everybody. whether it is your longer term positions you're managing, or for those of you who are swing trading. Again, I used an example earlier of somebody trading purely based on what a stock's likely to do following earnings. Obviously, we all know this to be a very volatile time of year, a lot of speculation, and it's pretty tough to determine what a stock's likely to do following earnings, whether it meets, it beats, it disappoints, whatever it might end up being. And we have plenty of ways to help you find examples for options trading if that is really what you're looking for. But a couple of earnings examples. We're going to start with AJRD here.
Okay, thank you, Joe. All right, I'm going to rip through the next three pretty quick because we've seen a lot of these patterns before, but it's not all of them happened right before earnings. A couple did, but anyway, if you're looking for earnings, potential earnings plays, this is what we look for. I look for, and it's only, it's a couple of examples, there's many ways we look at it, but this is a case where I'm looking for a base. I'm looking for that upper level consolidation within the base. And right before money flow, right before earnings, I'm seeing very, very aggressive money flow. So this is where we would look to buy some calls, short some puts, whatever, however you like to do it, buy some stock straight out. The other useful thing here is that, again, in terms of confirmation, let's say you didn't do anything until the stock broke out and then traded sideways for a few weeks. And you say, well, the technical analysis book says breaking out of a base that wide suggests that it should go up to like 32, 33. Okay. Makes sense on paper, but do you have something to confirm that? Well, in this particular case, we like to use the system and the indicators to try to confirm or not any breakout or breakdown. In this particular case, the breakout came on high volume. It got a little ahead of itself, so it stalled for a bit, but money flow stayed positive. It trailed off a little bit, but still stayed very positive. Relative strength had swung positive prior to the breakout of that rectangle. So that's good. And most importantly, the power gauge went positive, which means the longer to intermediate term fundamentals and quantitative factors were also improving. And that's very important because that gives us the confidence that if we want to buy it on the first dip after the breakout, we probably won't get caught. Okay. Conversely, when the stock ripped up for whatever reason that was, I don't know. Anyway, it ripped up to new highs and then stalled. And then you have to decide what to do. If you were lucky enough to buy it significantly lower, you just automatically take maybe half off the table. But if you bought it a little later and you're agitating about, whether you want to sell it or not, at least the system would say, look, they're selling into that up at the highs. I don't mind selling into it a little bit after a decent rally or a breakout, but to do it after a big rally and do it at new highs after an aggressive move tells me the street thinks it's overpriced and it's getting way ahead of itself. And then you had obviously the subsequent decline. NWSA, again, it was a good example. I found that, let's just say you have a portfolio of 10 or 15 stocks and you don't know what, you get a little nervous coming into every earnings quarter, even though it's long-term hold, you're not going to sell for tax reasons and all that stuff. But you want to have some feel for what's happening. How's the street looking at it? Here you can see that back in April, May, stock was going to report. Money flow went negative prior to it for about a month, so they weren't too sure about it. It wasn't severely negative, but it wasn't impressive. Probably like, okay, maybe you have a minor to modest rally, which you did. And then the stock broke out of that channel. Again, this is that, like that thing we never want to see unless we're trying to short. You break out to new highs and you do it on negative money flow. Now, in that particular case, relative strength and the power gauge was still positive, so I probably wouldn't short it, but it suggests to me that breakout is kind of bogus, and I would expect it to come back in. And that happened, that negative money flow on the breakout to the upside, that minor breakout, that happened right ahead of earnings. So when you take a stock to a new 52-week high and money flow is negative, right ahead of earnings, it's telling you something. And then obviously in November, ahead of the earnings report, they told you exactly the opposite. Stock was going mostly sideways with a minor upward bias, but they were very quietly accumulating for 2 months. And look at that. They happened to guess right that they had a very positive earnings surprise. So it can help it can help in many ways, not just with the price patterns, but also with earnings um, in those particular cases, and sometimes multiple times over the course of just 6 to 9 months. And finally, cores. Big breakout. We didn't get any early reading prior to the big breakout in August, except maybe the power gauge turning positive, but I need to see more than that. It didn't break any downtrends or base breakouts yet. But again, all right, so it breaks out, it pulls back, goes to a slightly new high, and then consolidates in front of earnings. And then again, same thing. An inside look into how they're betting on that particular earnings report. Very good money flow, relative strength still great, and the power gauge is good. So for those of you who like to take a shot with calls, that's the type of situation that the system can help you look for. And we don't have time in this particular presentation, but there's a screening application where you can actually hunt for these setups. You don't have to do it one by one.
All right, brilliant. So speaking of idea generation, one feature to get into before we put a bow on everything here, most recent feature that we put out here in throughout the year is our idea generation tool called the Chaikin Discovery Engine. Actually won a really great reward at the FinTech Awards this year in New York City. And how this product works, very, very useful, and the perfect example for it is as I was putting this deck together, everybody at Chaikin Analytics knows, and if you've seen our presentations before, you've seen Under Armour in our presentation before. Well, what I did was I used the Discovery Engine to help me find other classic bear examples. Simply, all I had to do was type in Under Armour at the top of the page. And one of the very first stocks that came up was Charter. Remember Charter Communications as that newly crowned classic bear that I showed earlier. All it took for me to do to find this idea, and again, if you're a swing trader, you talk about finding an immediate idea, this is it. Typed Under Armour in, found Charter Communications, just like that, I had a new opportunity. So very, very exciting tool for you to use. If you're, again, not too familiar with the technicalities that would be involved with screening, we have a wonderful screener available, but if you're just looking for an immediate idea, perhaps to take a long position on, you can see a potential swaps section down here for stocks like Michael Kors, CROX, other stocks with a bullish power gauge rating. So this is all included within our Chaikin Analytics platform, and it's very, very easy to use. So when it comes to finding new ideas, I know we're doing a lot of profiling today, but when it comes to idea generation, I want to make sure to show how easy that is. So that is our 5 steps for successful investing: power gauge rating, classic bulls, technicals, using our signals, and avoiding landmines. This is our secret to success, the discipline that we believe in and that we utilize with our platform. So the culmination of everything that we saw this year, it's going to sound like a pretty big result. And if you read through this, this is definitely the best testimonial that we've received. And you're seeing here from what Ken mentioned, turned $235,000 into $1.2 million after just a few months. Now, I know not all of you have $200,000 to play with. Again, I know I'll tell you up front, Ken was doing a lot of options trading. I'm sure not all of you intend to do that. But I want to demonstrate this for just how quickly and effectively you can be just by following the right stocks. So I'd be happy to follow up with you guys afterwards if you're interested in some of the more specifics that were going on here. But again, the ability to turn your portfolio over that quickly is one of the best rewards that we've heard from our users. Now, we heard from Ken because Ken was taking advantage of our webinar support program. This is something that, again, I absolutely, my number one contribution to Chaikin Analytics, the power gauge rating is incredibly effective. My job is to get as many people using this as possible. We've shown you a lot of new information, a brand new method for entering the market, and we would be asking a lot of you to gain access to the platform and to be on your own if we were to just go ahead and kind of turn you loose. This is why our entire program exists. That'll help you get up to speed as quickly and efficiently as possible. So your success, and again, really is the matter of fact. If you're not doing well with Chaikin Analytics, you don't have any reason to stick around. So we really want you to be successful. On day one, very first thing we want you to do is attend our onboard session. It's so important that we host this 3 times a week. We recorded today's presentation. Our next live one is going to be on Wednesday. We always record our presentations, covers all of the features and functionality. There's a lot of questions I'm sure you have. We typically get into that on those sessions, and you're welcome to attend us as often as you'd like. Now, for options trading, whether you're a regular options trader or maybe you just have a vague interest in options, we host options strategies sessions 3 times a week, all about finding ideas, but then also understanding strategies, whether it's simple stuff like calls and puts, or if you're doing a little more complex strategies such as credit spreads. All of this is covered throughout the sessions that we host here at Chaikin Analytics. And again, we always record them because we know you're busy and there's not always time to watch them live. So, and then of course, finally, one-on-ones. We are hosting one-on-one sessions all the time with individuals. It's all available by request. It's included as part of your subscription. We don't put any limits on there. Obviously, we expect you to come away with benefits from those sessions. If you are attending a one-on-one session once a week, then you're probably not picking up on the effectiveness on the program. But obviously, that's not a situation we encounter very often. Again, I mentioned an email that I got this afternoon. I didn't have time to put this in here, but one of our members emailed me telling me about his returns for 2017. And I usually like to show a screenshot of the email, but I didn't get the person's permission in time just because I got this just a few minutes before we started today. But it says, my portfolio is nearing a 40% return for this year. He mentions a tax bill signing will clinch it. No sign would hurt everyone. Obviously, that's a little bit of a different situation. But I owe that return to Chaikin Analytics. Many, many thanks. So I believe that was Bruce who emailed me. And again, it's just something great that I saw right before we got started. So Chaikin Analytics, our proven stock analysis and selection system, it's available on your desktop. You would pull it up the same way that you pull up your email. All of this right within the program, including, of course, the power gauge rating and all of those factors, along with our discovery engine for just how quickly and easy it is to help find ideas. And the offer that we're making for you today, typically it retails at $21.95 for a full year's worth of access. We're actually going to drop that down big time today, obviously, given that it's the holiday. But our webinar special for this year is for today is $17.95 for a full year to Chaikin. Does expire on Friday, December 22nd. We'd love to get you in here so you have time to attend an onboard session and really hit the ground running. All of this includes our intraday charts functionality that we're always putting in the program, new earnings content where this is just more examples of things that we've added and made the program more robust and efficient. And of course, John's newsletters, as you can see here. All of this includes the small group tutorials, our unlimited coaching and support. Again, think about one-on-one sessions, think about group sessions based on all the topics we covered. In addition to, again, one-on-ones and our weekly, our daily newsletter from John Schlitz. You'll also get a weekly newsletter from Mark Chaikin. And it really is just a complete program, and it's all completely dedicated to your success. One final testimonial here. Another great partner that we've been able to do business with is John Malden. Analysts are enthusiastic users of Chaikin Analytics. Again, this is applying a little bit more to the the institutional analyst. We don't expect to completely overhaul anyone's program, but we do have something to offer to your daily routine. For analytics, like to use it to analyze trades and recommendations for your rating team, giving them feedback and insight on own ideas. Mark's system has been integrated into my daily routine and due diligence process for vetting and evaluating potential investments. That's exactly the role that we like to play. And so we're glad to have John Malden with us. So last thing that I want to do here is drop the cost down one more time to $15.99 for a full year to Chaikin Analytics. You can go to chaikinanalytics.com/new start, or send us an email at sales@chaikinanalytics.com. Give us a call at 877-697-6783. This is a full year's worth access to Chaikin Analytics. And everything that you've seen today is included. There's no upselling or anything. We don't charge for one-on-ones. We don't charge for group sessions, anything like that. That's all part of your subscription. And we are really excited to have you hit the ground running and being effective and starting 2018 out on the right leg. So with all that said, I want to say thank you very much on behalf of myself as well as John Schlitz. Keep an eye out for the recording. We're going to send this out tomorrow. In the meantime, any questions, again, you can give us a call or email us right now, sales@chaikinanalytics.com, or give us a call at 877-697-6783. Till then, have a wonderful evening. Enjoy your holiday season, and we'll see you on our next onboard session.